state and the whole company. And he talked to me and told me all of his secrets for like over an hour. It was awesome.
Nice. 11. And where this is right in your area?
No, this is a guy from Hawaii. It's amazing. He's part of our brokerage, and he's got a Calendly. And anyone has access to him.
Is it Tony?
Oh, I was like, oh, who are we talking about? Are we talking about Dylan?
Dude, I'm telling you, I'm just saying the obvious.
Dylan.
If you haven't taken the time to pick Dylan's brain, and you have access to this agent like that's on our team, you're doing yourself a disservice.
Oh, dude, I love it. Look at Dylan. I was like, an agent in Hawaii. That's like, who is that? Dylan, we got to go crush that dude. Who is it? We're going to take a mission, right? We're going to get in a canoe. We're going to find out where this dude's at. We're taking him down. It's Dylan. All right. You're right.
I'm gonna go next because I got all kinds of stuff to share.
Okay, go.
Last thing though, honestly though, that you said something that's amazing. Like that to me, that was amazing. I appreciate Dylan very much, and he took his time out of his day, which we know he tracks his time very diligently, and he took a lot of time for me. So thank you.
You're welcome, man. I enjoyed it. I got just as much out of it as you did. So
I love it, dude. That's why we're amazing. Good job, Bo. All right, Dylan.
So here's a result. Like, what are we like? It's 5 or 6 weeks out of build, something like that. And Brent, again, one of the things that is great about EXP is I just rip off and duplicate, right? I look at smart people, see what they're doing, and actually execute on it. So Brent, before build, made a challenge to get as many of your people to build as possible, right? And I arguably, I don't know about this, but he put me on social media, but I might have had more people there personally than anybody else. Like I personally paid for 10 of my agents to come, bought their ticket because he said to do that. As a leader, you need to do that and get your people there. And I think in total we had like 15 from my group there. And so like 30 days later, I've had a slow, steady growth in my revenue share group. I've never had more than 10 people add into my revenue share group in a 30-day period ever in 4 years, but I got 12 right now. So like 22 of them are my sponsees, right? So like the people in my group that I brought are bringing people on, and it's like the shit works. So you just got to listen to it and do it, right? And so that was a big takeaway. Is I'm super stoked about that it's not just me, building. It's now I have people on the team, some of my FLAs or FLQAs that I brought with me, building. And two other cool things is I'm gonna be a speaker at EXPCon. So the Build a Legacy track, there's like I think 3 or 4 like breakout tracks in there, and I think they're doing it differently this year, where like you don't have to go in between rooms. Like you pick the track you want to be on, and then there's going to be a lineup of speakers that are just going to go. It's going to be like a mini general session, right? So instead of having like switch rooms every 30 minutes or whatever, you're going to stay in one room and they're going to have a track on attraction, a track on production. This one is building a legacy and team building. So that's going to be on Wednesday. And then I shot a podcast with Glenn Sanford like probably a month ago, but it just came out this morning. So check it out on the EXP Realty YouTube channel is on there. So all kinds. Good day. Awesome day.
Dude, I love it. Boom. Trifecta there. Congratulations on the team, though. You're right. It's like even Shreen talks about, right? Every time you go to any one of the events, you come back on fire and you recruit always 2 to 3 to 5 personals or your team. And that's what happens when you get the team going there, their environment, they get infectious behind this thing. And the excitement grows to fire, right? You put the basement in fire. Brent's always been good about that, like starting fires in the basement and watching it just accelerate. And so it's always these people get excited. They come back from the events. They just are on fire. They want to grow. So the numbers are proving it right there, Dylan. It does work. You just got to do it.
And 2 of those new agents are in Florida, like as far away as you could possibly be. So now the organization is expanding to Florida, and it's 2 separate agents that brought those agents on, right? So that whole leg is going to grow now, and it's like it happens, but just got to put time and energy into it.
I love it. Good job. Congratulations. And good job for being EXPCon. You're speaking English. Well, you're at shareholders. You spoke at shareholders too, right?
On a panel, yeah.
Yeah. All right, dude. Representing. Good job. All right. Anybody else got some good wins for anything at all? Exciting? Go for it, Brandy. Jump in.
I got back from Maui last night because I was volunteering at a birth center for the past 10 days. And I'm just really proud of everybody over there. That's all I got to say about that. Like, they are really pulling together and just doing what needs to be done to get to where they need to be. And there's so much aloha and so much love. And don't believe the social media stuff that everyone's mad at each other. They're not. It's not. Really, it's just people trying to survive and do better. So that was good. It was a great experience.
Awesome. Thanks for sharing that. And thanks for doing your part and helping too. Appreciate that. That's awesome. All right. We good? We're going to move on then. If nobody else has anything, give it once, twice, 3 times. All right. Don't forget also the book of the month. If y'all got it yet, The Gap in the Game, Dan Sullivan. Great read. I'm loving it today right now. My chapters I read today was about 3 wins. Every morning, you should be writing 3 wins you did from the day previously, and then forecast out or future pace 3 more wins you're going to do for the day. It starts to ingrain a repetitive repetition in your mind of these small, stackable, undeniable wins, which creates confidence in you and whatever you're doing. I'm saying right now, this is where you gotta live, in the game. Stop living in the gap. The gap is where a majority of us are in on a daily basis because of all the things going on in our environment and around us. But get yourself into the game. Great read. If you haven't got it, get it. It's on the Google Team Freedom book. The Amazon links on there. I suggest strongly read it. I suggest strongly every month read the book. I'm just saying, read a book. Damn, read a book. If you ain't doing it, read a book. Because if you're gonna do yourself justice right now, read a book. You will not disservice yourself by reading a book. I'm telling you right now, you will become a 10% smarter, knowledgeable, more integrated and experienced and on fire you ever read reading a book. I'm just telling you, it's changed my life dramatically. So read a book. Get on there. We've had one every month since January. Okay, awesome. And then other than that, I think that's it. We're going to jump into our speaker for today, Drew Shade, a good friend of mine back in Roseville. Yes, the old hometown. He's an amazing guy, great energy, just a very humbling individual, very knowledgeable. Previously, I think he was a semi-pro or pro hockey player.
No, I am strictly an amateur hockey player. Although we just won our sixth title here in the adults league last week. That was a lot of fun. And but yes, very much amateur. Never even close to being professional.
Right. We can say that, as long as you have all your teeth in it, means you're not really professional yet because you have your teeth still left. But no, he's a mortgage broker and but he's also certified financial planner. Wanted to kind of jump on here today. I know this is a big place in which a lot of realtors, we all know, right? There's no real retirement for realtors. That's why we love EXP. Thank you. Majority of us have more funerals to attend than retirement parties. It's kind of how it rolled. It's sad, but true. So Drew was talking about, he really integrates a lot of training systems and stuff about financial planning to help people really get themselves set up financially, whether it's to buy a home or just in personal. So Drew Shade, I appreciate you taking the time today, my friend, to come in and share whatever knowledge you have for us, some tidbits and ideas, and hopefully if you guys would take notes on some of this stuff. So take it away, Drew. I appreciate it.
Wonderful. Thanks for the awesome intro. So I really want to talk kind of like a 2-pronged talk today. And how long do I have?
We got about 45 minutes.
Oh, wow. Okay. That's way more than I thought I had. Okay. Hopefully I can fill that then.
Right. I mean, we do Q&A at the end or whatever. I mean, it's no pressure.
Perfect. So I wanted to talk 2-pronged, just like a quick mortgage update. From there, we'll go into specific financial strategies that can be used for your clients. And then I want to spend a lot of time actually talking about you all and your business and things that you can do to develop yourself and improve your net worth and your personal wealth. So mortgage markets, I'm sure it's no surprise. Hopefully you guys are all keep tabs on that. Interest rates right now, highest they've been in 22 years. It's a real challenge. I'm sure you guys are all experiencing that challenge in your business, as far as we're in a real weird time, right? We have low supply, which is holding prices up, but it's incredibly expensive to buy because interest rates are high. And so what that's doing is that's just crushing volume. I'm sure you guys, I'm preaching to the choir here about that, right? Like everybody's experiencing that. So strategies, really the number one thing that I can hopefully tell you as far as strategy wise is keep in mind that price reduction is not the best way to save somebody money. It's looking at things like a credit for a 2-1 buy down or to pay points on a loan, because every dollar you invest there is worth like what you have to spend like $5 on a price reduction. So definitely getting strategic about that is a way that we can get people into homes where they can afford it and stretch their dollar further. And that's the name of the game right now. Purchasing power is, we need to find creative ways to make that, to expand that, to get more people able to afford their homes. Let's see here. So that's my tidbit. As far as forecasting mortgage rates, I think it's very hard. There's a saying that I love. It's the market can remain irrational longer than you can remain solvent. This actually goes back like 400 years to a bubble in the South Seas Trading Company. But it has to do with the fact that we are starting to see inflation calm down, right? We're starting to see the numbers get better, but that doesn't mean it would make sense that we'd start seeing like an easing with interest rates. That can last a lot longer than it really should. We all know that government isn't exactly the most efficient thing. And for them to react and change policy and to start easing up on rates could take considerably more time than people are forecasting. I mean, well, not everybody, but a lot of people were forecasting we'd be back at 5.5% by the fall. Well, here we are. Fall is less than a month away, and we're at like 7.25%. So be careful, be wary of any pundits who are telling you what you want to hear. Keep in mind that nobody has that crystal ball. But the best thing you can do is to prepare for whatever situation is coming at you by being proactive. So from there, I want to pivot to things that your buyers can do to put themselves in a better situation. When it comes to lending, it's not, I think people try and complicate it more than it really is. It boils down to three things. How's your credit? How's your ability to make your mortgage payment, i.e. your income? And what's your collateral? What's your down payment? So there are plenty of programs out there with lower down payment options. I'm sure we're all familiar with FHA as one of them. I think you're going to see a lot more FHA activity because with the, it's hard to, I don't know if I can do a show of hands here, but loan level pricing adjustments, that was a big story back in May that there were new pricing adjustments for conventional loans. Show of hands who remembers this.
Yeah, I do.
Okay. Well, I got one. So it was a big to-do because a lot of the media spin was you're punishing more qualified borrowers because you're increasing some of the price adjustments for them and you're easing up on price adjustments for maybe your less qualified borrowers. They're trying to make it a little bit more of a narrow gap between well-qualified and not well-qualified. What that did, though, that coincided with a reduction in the mortgage insurance premium on FHA loans. And the unintended consequence of that is, for the longest time, conventional loans were far superior than FHA. Now, for a lot of people, even people with good credit and sizable down payments, FHA loans are oftentimes pricing better. So definitely something that you're going to want to look at with all of your clients is even if they have 15, even if they have 20% down, make sure and have your lender price out an FHA option for them. Another thing with FHA loans, and I have not heard anybody talk about this, but this is something that will position you as somebody who cares about your clients, not just getting in the home, but where they're going to be at 1, 3, 5 years from now, is FHA loans have the ability to be refinanced through a streamlined process. Conventional loans don't have that option. And what that means is that, say we are 2 years down the road, and say you had somebody who had a low down payment and they opted for an FHA loan. Let's say that housing prices do have a correction. So far with the supply, we're not seeing that really happen. We saw it happen and then it's come right back up. But we don't know what's going to happen 2 years from now. Hypothetically, let's look at two people who both put 5% down. One went FHA and one went conventional. And let's say that their home value 2 years from now is dropped 10%. And interest rates are also down a whole percent. The person who went conventional is going to have to pony up cash because they're not going to be able to finance at that lower appraised value. Their loan to value ratio will be too high, and they will be told, unfortunately, hey, I'm sorry, you're stuck with that 7.25% rate you got because you don't have enough equity to refinance. With an FHA loan, that person can refinance it with no appraisal. All that matters is that they've made their payments on time since they've had the loan, and they will be able to refinance down to that lower rate. They'll be able to do it at very little cost to them. It's one of the easiest loans in the world because they don't have to requalify for their income. There's no appraisal. It's super easy. So they have the option or they know that they will be able to, if rates drop, refinance it regardless of what their home value does. It's something that, again, I'm not hearing anybody talk about, but it's almost like having an insurance policy of being able to refi to a lower rate and remove the risk of home value changes in that time period. So don't sleep on FHA is basically my big thing. I have a hand here.
Hey, I'm just curious on FHA, being that we never, ever, I've never seen one here in Hawaii. I'm just curious. Is there a loan limit on them?
FHAs, they do have loan limits, just like conventionals. Let me pull it up for you. For Hawaii, it's going to be different. So let me pull it up and just give you an amount on that.
I mean, I used to do FHA loans a long time ago, but that was in California. And I haven't seen anybody have one here, but I imagine they could if we got in the right price range, maybe.
Let's see here.
In that streamline program, we did those years ago too, where you're able to get somebody, they pretty much laterally go into a different rate, not having to do all the requirements that he talked about. So streamline's been on for a long time. We did them back then.
Streamline's awesome too, because you can do a select term on it. So let's say they're in, because one of the big things you hear from people, I've paid on my loan for 4 years. I don't want to start over. We can streamline it to a 26-year loan, 4 years in, and nothing changes except their payment drops and they're paying less interest.
Yeah.
Let's see here. I'm pulling up just from a quick Google, and I apologize, I'm not licensed in Hawaii, but maximum loan limit in Hawaii, 517,500. So that could pose a problem, because I know that seems like it would be higher there. Let's see if we go click somewhere else.
We have condos at that price.
Right. FHA loan limits ranging between 517,500 and 977,500 for a single family home. So it's going to vary based on county. And if I'm not mistaken, I think most of the counties in Hawaii are like island, right?
Honolulu County would be our biggest county.
Honolulu County. So
most people.
I'm guessing Honolulu County is probably at the upper end of that. Let's see here. Right, because that's where all the people are.
Mm-hmm. Thank you for this info. It should be helpful to us.
Honolulu County for a single family residence, 770,500.
That's why we don't see them, unfortunately. But
Yeah.
That's Waianae, maybe.
Anybody in Maui County?
I don't think Mary's in Maui here, no.
Kauai County.
Roan and
Ronnie's usually here. Try.
Is it Kalawao County? That's 977,500. So those three are 977,500. So you can basically go up to $1 million in on Maui, on Kauai, and Kalawao County. Honolulu 770,500.
Yeah, that's strange. Cool.
Yeah. So that is, from a lending perspective, something that I would definitely look at for your clients, especially because of the hidden benefit of the streamline. So Chris said something. I'm going to jump to my next point and kind of put on the financial planner hat. Real estate agents not having a retirement. This is something that I hear all the time. I heard it at a panel at our local Placer County Association of Realtors, and it's frankly not true. Though how I heard it there is I heard, I'm a solo agent. I don't have a 401k, and I want to make sure everybody is aware that there is something called an individual 401k. It's something that you can set up as an individual business owner for yourself that will give you the benefits of a 401k, and frankly, more benefits than an employee has. Real quick rundown. Is everybody familiar with what a 401k is? Right. It's an employer sponsored retirement plan. So you can take money out of your paycheck, put it in there. It goes in before tax. So if you have a $10,000 paycheck and you take $1,000 out, you don't pay tax on that $1,000. That tax is deferred until you pull that money out. Rules are the earliest you can pull it out without any penalties, 59 and a half. You got to start pulling it out at about age 73. But for some people, that can be 50 years that they've delayed paying taxes on it. If you were having a really good year, that is, say you're in a higher income tax bracket, being able to defer paying taxes on that money to later in life where perhaps you are in a lower income tax bracket is a huge win for you. As a self-employed individual, you have the benefit of the individual 401k, which allows you to put money in as the employee, but also as your employer. So this year, if it's $66,000 that you were allowed to put away. So stop and think about that. Let's say you are having a very good year and you are in the 35% tax bracket. So the upper end of your income stream is all being taxed at 35% federally. What's the state income tax rate in Hawaii?
I don't know. Anybody know what it is here? Dylan, you have to know what it is, or Shereen?
I'm going. California is about 10%. So
What are you asking?
State income tax rate in Hawaii.
Oh, it's a good. Well, the highest rate's like 11.5%.
Did you say 11.5?
Yeah.
Yeah. Okay. So let's say that you have a very good year and you're looking at a potential of what, 45%? Those later dollars that you're making, say in November, December, you're giving almost half of it to either the federal government or the state government. You could, instead of giving them $30,000, you could pay yourself $60,000 to set yourself up for retirement. It's huge, and it's something that more real estate agents should be taking care of or taking advantage of. Especially, I know a lot of agents want to, and there's a lot of perks to it, investing in real estate yourselves. But there is something to be said for diversification. If your income is based off of the real estate market and your retirement is based off of the real estate market, you are setting yourself up for, if there are any crashes, pullbacks, anything, you're going to get hit with a double whammy, right? Your retirement's going to get crushed and your income's going to get crushed. So we can chat too about some of the benefits of investing in real estate as a real estate professional, because there's tons. But I would advise all of you, look into setting up an individual 401k, look into budgeting how much you can put in there. If you can max it, you should max it. I personally can say that I have deferred over $100,000 worth of income tax just in the past 4 years that I did not have to pay to Uncle Sam in the state of California because I invested it in my own retirement instead. The best way to do it is go through like E-Trade, Schwab, one of the discounts. You do not really need a financial advisor for this. Look into getting an index fund. Index funds are very low cost, which the less money you're paying in management fees, the more money stays in your account. And while it may not seem like a lot, over a lifetime of investing, you're talking about hundreds of thousands of dollars that you're going to keep because you're not paying them in management fees, and that money compounds. The name of the game is time. The longer that money can sit there and compound, right, where you're earning not just returns on the money you put in, but returns on your returns, you get that snowball effect. I would look at a lot of them have, if you want to look at, say, like Vanguard is probably the best known one and is an awesome fund family to look at. They'll have target date funds. So you can, say, all right, if I'm going to turn 60 in the year 2040, there's going to be a fund, the 2040 fund. They will do all the rebalancing for you. They will fully diversify. You'll own, tens of thousands of different securities. So you're going to have the diversification, which is one of the most important things because it diversifies away a lot of the risk. And set it on autopilot. I mean, if you set it to $1,000 a month or $500, whatever you can afford to do, set that up on autopilot, drip in there every single month, and you will be amazed when you open up your statement, a few years down the line, you're like, oh my, I've got like $250,000 saved for retirement. And it didn't feel like it was really that hard to do. The hardest part is starting. It's like that, the journey of 1,000 miles starts with a single step. But I implore you, do that because you do have a 401k. You just got to set it up yourself, but it's not hard to do. Yeah. Any questions on that?
What would be the
Thank you.
difference between a 401k and a Roth IRA? Like
Great
if you're
question.
setting it up yourself.
Okay, great question. I love that. So a Roth, there are Roth 401ks and traditional 401ks. There's Roth IRAs and traditional IRAs. The Roth portion means that you are not taking the tax break today. You're taking it in the future. Or another way to put it is with a traditional, you are not paying any tax on the seeds and you're going to pay tax on the harvest. With a Roth, you're paying tax on the seed, but the harvest is tax free. And that's a really good question of which is better for you as an individual. And that might vary from year to year. I'm so glad you brought that up because a Roth might be a good option for some of you or for a lot of you. The younger you are, a good rule of thumb is the younger you are, the Roth becomes way better because you pay the tax up front and you're done and all the growth is tax-free. Well, if you're 20 years old, that's like 50 years of tax-free growth. Now, if you're in your 50s, and especially when we're in our 50s, we tend to be in like our higher earning years. Now, the growth portion is going to be over a shorter period of time, and we're likely paying a higher tax rate on that seed. A traditional might be better for you, but for somebody who's younger or somebody who's just starting out, a Roth is fantastic because with 40 to 50 years worth of time for that money to compound and grow, that $10,000 might be $100,000, and better to pay tax only on the 10 than have to pay it on the 100.
Yeah. Well, one way that was explained to me, which makes a lot of sense, is have you ever seen taxes go down? So would you rather pay taxes now or in the future? And so it's just one thing to think about, right? Is if you're gonna get taxed on it in the future when you withdraw, do you think taxes are gonna be higher or lower? Because never in human history have taxes been lower in the future. So,
right. So that's a good point to bring up is where do you think taxes will be? Right now, they are about the lowest that they've been. But on the flip side is while the overall taxes might be lower, if you are a high earner, if you're selling a lot of homes, and 30 years from now when you're retired and your income has dropped, even though overall tax rates might be higher, then your income might be lower and keep you in a lower tax rate. It's a lot of thinking about where you plan to be. Are you going to I love what I do. When I'm able to retire, I probably won't because I like my job and I like what I do, and I don't look forward to the day when I stop doing it because I have fun with my job. And hopefully a lot of you find yourself in that same position where I don't know that there financially is a better feeling than knowing you can stop working, but not having to continue working, choosing to continue working because you love what you do, but also knowing that you don't have to do it. That you're doing it simply out of your love for your profession.
Yeah, I like that. It's about the choice, right? The majority of us on this call really do not have a choice. Most people don't have a choice. It's required to work in order to pay bills to survive and live. But when you get to that place we were talking about where you can build something up where it finally starts to work for you instead of you working for it, then that enables you this ability to have a choice, which I think that's where everybody wants to be at. Just have the choice to do what you want to do, right? You call the shots. You make your own path.
Yeah, and you hit the nail on the head there, right? It's most people work for their money. To truly build wealth, you got to put your money to work for you, right? And so I look at things, a lot of agents who I talk to, we talk about, when you have your money come in, are you strategic with it? Does it just go into your personal bank account, or are you, I have people where I coach them on, all right, you should have like 4 bank accounts, right? You should have one where you take, 25 to 30% of it and set it aside because you got to pay Uncle Sam. And then 10% of it you set aside for reinvesting in your business through things like, advertising, coaching, right? That automatically comes out when that check comes in. You have another, say 10% that goes toward an individual 401k for retirement. And then the rest of it is what you use to live and play with. But being strategic with it, because if it all goes into one pot, it's very easy to overspend and overindulge. But if you allocate your funds and budget them up front and set it as a hard and fast rule of this money comes in, this goes to this account, this goes to this account without question. You'll be more disciplined with your spending for your personal life, and you'll be able to grow your business faster. There's nothing better. I'm talking here about a 401k, and you set it there and forget it and it'll grow. But money that you can reinvest in yourself to grow your business is going to pay far more returns than any 401k or any investment ever will, right?
I have a question.
Sure.
I heard of this called TFRA, tax-free something.
Is that like a tax-free annuity?
Wait, I took it.
Tax-free life insurance?
No, so it's basically you never pay taxes on growth ever. You can deposit as much as you want. You never report income to the IRS. Do you know what I'm talking about?
It sounds perhaps like some sort of insurance product. It sounds a lot like maybe an annuity. My word of caution there is that those tend to come with very, very, very high fees that will certainly offset any break you're getting in taxes. I would say, like, if you find yourself in a position where you can max out your 401k, so you're putting $66,000 a year away, and you still have money that you want to park somewhere, at that point, maybe look at one of those. But if you're paying 3.5% to 5% per year in fees, that means that if that investment essentially has to get a 13% rate of return for you to match just an S&P 500 index fund. So it's very unlikely it'll be able to churn out returns like that consistently. There's a reason why they're so heavily sold. It's because the commissions on them are big, because the costs are big. So definitely be wary of something like that. I'm not saying they're all bad, and I'm not saying they don't have their place, but the tail with those is typically that the fees are astronomical.
Thank you. And I have one more question, please. I'm not sure if you can answer that, but maybe it's for EXP too. I did ask, but I'm not getting. So when I recommended to open a business name for LLC for the real estate.
Yes.
But the checks that we get in are on our personal name. My accountant, she doing my taxes now, and she said, okay, your social security, it's still on the 1099. So what are you doing here? Basically, it's still not, it's still not an entity that you know what I mean? Because we get the check by our name.
Yeah.
And it's not the EIN on the 1099. It's the social security.
You got
Are you in Hawaii? Right?
Yes.
So this is a Hawaii state law thing. It varies from state to state. So in Hawaii, you can only be paid as an individual. You cannot be paid as a business entity for real estate services. And so the way I deal with it is I deposit all that money into a personal checking account and then transfer it into my business checking account, which I pay myself out of and I run all my expenses out of. And then we file as a single member LLC. So there's a way around it, but you're not going to get paid as a business entity. That's
okay. So what's the purpose to open LLC?
So you have a business entity that you can use to file corporate taxes, and you have some protection over your personal finances.
You also, as an LLC, can pay yourself as an employee, and you can avoid paying payroll taxes on a sizable amount of your income. So if your business is bringing in more than, say, like 120 a year, you pay yourself a salary of $60,000, and that other $60,000 can pass through to you, but you'll avoid paying payroll taxes for like Social Security, Medi-Cal, and so there's significant tax savings because of the pass-through taxation of corporate earnings as you'd get with an LLC.
So you're saying when I get the checks to deposit to a personal account, but to take the expenses from the LLC and then file, that's what you're saying?
I would speak to I'm not familiar with the law and tax law in Hawaii. It sounds like Dylan has some info on it, but I would definitely speak to your tax professional and ask them of how do I, with the state law, it sounds like there's a workaround. How do I work around so that I can file as an LLC?
Okay, thank you.
And then Bo, I see your hands raised.
Yeah.
Yep. I just wanted to comment on what you were saying about the 401k and putting money aside. So for most people, I would imagine I've kind of went through both ends of the spectrum and found kind of a hybrid model that I'd highly recommend. And I don't know how it is in Hawaii because you guys probably don't have seasons like we do here in Indiana. But our slow season is over the holidays, and in January and February, it's very cold. So business just drops down during that time, and you want to survive that, obviously, through your sales. So you have to budget accordingly. But when you're contributing to your 401k, unless you're willing to be penalized in tax, you can't put that money in and then find out you're running into a slow season and then take it back out. So it's very important on how you allocate it. And so what I've found is instead of maxing out, dividing by 12 months the max and then putting that in every month, which that's how I started to do it. I realized, well, I may need some of that money in the future, so I don't want to do it that way. And I don't want to wait till the very end because then you get caught spending it or it disappears out of your account for whatever reason if you can't budget well enough and control your expenses. So the best way I've found is that you can do the hybrid of that, which is set a minimum that you want to contribute, but keep your pay in another account, obviously like an OPEX account or something of your business. And then when you get to tax time, like April 15th, I work with my accountant and decide, okay, this is how and by that time our business is picking up in the spring again. So if I've made it through my period of slowness, and then I can say, okay, this is extra money, and you can contribute up to that point, up to April 15th, even for the last year. And if you file an extension, I think you can even contribute even maybe longer. I'm not sure, but nonetheless, you can kind of go back and say, well, I have $20,000 extra now that I see that I'm back in spring and making sales again. Let me go ahead and contribute that for the 2022 period or whatever, if it's April 15th of this year. So that's been where I've landed for now. It's just want to give everybody, that perspective because it's hard to figure out, and you can't take the money back or else it's penalized in tax. So you don't want to dump it all in right at the beginning. It's nice to wait till the end to understand your finances.
I think that's a really, really great point there. Something to build off of that, and another way to skin that cat is making sure that you have an emergency fund in cash. Or instead of saying I'm doing $1,000 a month, say, all right, when I get my commission check, this percentage of my commission check gets lopped off and sent to the 401k. And that way, if you have seasonally lean months, you're not still sending in $1,000 when you don't have a commission check coming in that month. You're doing it by when the money comes in, but also doing it strategically where, in April, you say, oh, well, business is picking up. I just got this check and man, I still have room to put $20,000 in my 401k. Let's send it over there. Yeah.
I get great ideas. Anybody got any more questions for Drew? We got about 15 more minutes here. This is some good topics here. I think a lot of this is great for people to get really educated on what some of the things do, because most people don't know, right? Like, what should I do? Where should I put money at? And most times you get in that state where you don't know, then you just don't do anything at all, right? It's that analysis of process. You think about it and just, I don't know what to do. And then you just kind of procrastinate. Next thing you know, 2, 3 years, 5 years have passed by and you get all this stuff where you haven't really done much for yourself or set yourself up. So yeah.
Yeah, I was talking about this with, go ahead.
Never too late, because I didn't have any retirement fund at 50, and I started at 50 and I'm 68. I think I put 300,000 in, and I have $1 million now. So
see,
I'm the guy that has the 900 and the 4% and the 3,000 a month, but still not attractive. So
still top ramen, right? Still top ramen and spam. We're good.
I fund my IRA right before I pay my taxes, and then I get a break in my taxes if you do that too.
Mm-hmm.
So that's always helpful.
That's like both strategy. Yeah, absolutely. Yeah. I was talking with my wife about this. It's really sad that our education system, you always see the jokes about you learn to play the recorder in 3rd grade and you learn about, how to calculate the area of a trapezoid, but we got 1 semester of econ like the second half of our senior year, when most of us are already checked out, we're already, know where we're going, and they just, kind of throw it on as a little add-on. Like, this should really be taught from like day one. And these things are not hard, they're just not taught. And so and it's sad because we all end up paying for it in the long run, because you find yourself at 75 years old and you see how much Social Security is, and it's like, you can't live off of that. But had these things been taught, at age 6, 10, 13, 15, like, people would be way better off. It's just, and it makes you wonder, like, why is that? Why do we not teach our children how to manage their money better? It's not particularly difficult. It's taking that first step. And I think a lot of people are so afraid of making the wrong decision that they make no decision. And, that's tomorrow Drew's problem. So I'll just, kick it down the road. And then you find yourself like, oh man, here I am at 50 and I don't have anything saved. And, if there's one lesson, it's time in the market is the most important thing. The longer you can put that money to work and let it build off of itself, better you're going to be. So even if it's setting up like $100 a month, putting something away is vitally important. And as agents, you have the ability with an individual 401k to do it. Yeah. And if you find yourself in the position where like only 100 a month is all you can afford, then do a Roth, because odds are you're not in the, if you're in the 38th percentile tax bracket and you can only afford $100 a month, we need to talk about your spending. So,
Better class.
So that said, take advantage of that, because it's there for the taking for you, and it'll save you a ton of money and will set you up for later in life to live the life you want to live.
I love it. Jessica's got a question. Go for it, Jessica.
Oh yeah, go for it.
So let's say you can only do the Roth for now, and then you get to a point where you can do a traditional 401. Are you allowed to have both, or is that just overkill?
No, that's a great question. You're allowed to have both. The Roth does have income limits. So you reach a certain age where you are, at least with Roth IRAs, where you have to do what's called a backdoor, where you have to put it into a traditional and then you have to do a conversion. Without getting too far off in the weeds, that is a strategy you can look at for down the road. Let's say you have, stacked up like, years and years and years of great income, and you're deferring that tax. And let's say you take a year off, or you're semi-retired and your income drops. That might be a great year to convert your traditional to a Roth. So at that point, you'll pay income tax on whatever you converted over, then you're done. So, but you can absolutely have both, and you can strategically look at, hey, this was a very, very high income year. I'm going traditional to save money on taxes. Hey, this was a pretty lean year. I'm going to put money in my Roth because I don't have a high tax bracket this year. So let's get paying the taxes over with while I've got a cheap tax bill this year. And then, so it's something you'll definitely want to talk about with your tax preparer. Strategically, what's the best route for you, and it can definitely change year over year. No, that's a fantastic question. You can absolutely have both.
Awesome. All right. Well, we got about 9 minutes left.
Okay.
Anybody else got questions for Drew here? This is a great conversation.
I can pivot back to loans real quick. There's something that I thought of kind of after the fact while we've been chatting. How are you guys doing as far as having to compete with cash buyers? Do you guys have a lot of cash buyers? Okay. So do you find yourself in the position where you've got a non-cash buyer and you're trying to compete with that person who's paying cash? Okay. So a couple of strategies that I've been using that have gotten us to beat out cash without having to really go much over what the cash offer is being able to waive contingencies. So we're familiar with contingencies, right? We've got loan contingencies, appraisal contingencies, inspection contingencies. Inspection, unless the seller's already done the inspection and you take it at what it's worth and have faith in it, it's probably one you're not going to want to waive, right? Nothing like getting into contract on a house and finding out that it has a giant crack in the foundation. and you waive your right to walk away over that. But the other two, appraisal and loan, those really, if you're working with a qualified and knowledgeable lender, they should really be able to tell you kind of from day one if you actually need those. And I find that it's become just like the status quo to put those contingencies in, and it's just like the default thing to do. But my clientele, I find that, I don't know, 80 to 90% of them can waive those. The loan contingency, right? Loans come down to credit, collateral, and capacity, right? We should know that up front before we ever submit the offer, right? Okay, my person has a 795 credit score, and their debt to income ratio is, 17%, and they're putting down 25%. Does that person need a loan contingency? No, that person is never going to be denied a loan, right? Now, so that's something you should have that, because all of a sudden I'm saying to the when I'm talking to my seller, they're waiving their loan contingency. They are saying that they're waiving their right to walk away over not being approved for a loan. We don't need a loan contingency when we know that they're a rock solid client. Same thing with appraisal, right? Like, you can run comps on a house, right? If this person is putting 25% down, do we need an appraisal contingency? No, we don't, right? Because we know even if it comes in a little short, it doesn't really change anything for their loan. We could actually, we're doing things where we say, all right, it's, we've comped it out, and we know that nothing, say we're paying $700 for the house, and we know so long as it appraises at $650 and above, nothing changes on our loan. We'll write the contract and say, hey, our appraisal contingency is, we revoke the right to invoke it unless it appraises below $650, right? The agent's going to look at that and be like, there's no way it's going to appraise below $650. Maybe $700 is a stretch, but all of a sudden we've removed all those barriers, and we are very much about as good as a cash offer, right? We're not canceling because we're not getting a loan. We're not canceling because it's not appraising. Those are the reasons a cash offer is better than a finance offer. But we've leveled the playing field. So I would definitely talk with your loan people and ask, hey, what does it look like? I mean, how strong are they? Can we waive these things? You'll be surprised how many people can waive them. Yeah. And then you can go in and say, hey, I know you have a cash offer, but we're just as good as cash. We're not going to cancel over these things. The loan's a done deal. The appraisal is a non-factor. Those are the reasons you like cash. But look, we're competitive. Yeah. Any questions on that one? Let's look at the inverse. When do you not want to waive those? Definitely don't want to waive them with low down payment. What's that?
100% financing. We see a lot of that.
100% financing. Yeah. Don't waive those on 100% financing. Self-employed client, make sure that your loan person has done a thorough analysis of their tax returns. Tale as old as time, the people, I mean, I had clients who bought a $2.5 million house here, and how's your income? Oh yeah, 900 grand last year. Well, we got their tax returns, and they may have made 900 themselves, but because of creative accounting, etc., and what they tell Uncle Sam, not the case, right? So definitely those types of things, you're going to want to keep those contingencies in place, because those curveballs, those are where the curveballs come from.
Yeah. Totally. Awesome.
Cool.
All right. Anybody got any more thoughts or ideas or questions on what Drew had mentioned here? Some great content, Drew, that we have provided for us. Appreciate it. I mean, all from the loan spectrum side, all the way to the investment in ourselves, for advice for our clients to help them with the buyers. I think right now, ideally, we're in a situation where the market is a little bit more crazy. So, we have to get creative. And these are creative ideas that you can do. Whether you try them or not, it's up to you. Ideally, I think case by case scenario, everything is different. So you figure out what works for you, and you have to kind of adapt to each one of those ideas as they arise. But nonetheless, it does give you guys some ammunition and ideas that potentially could be something that may work out for you guys. But I think in itself, the education piece for us personally as entrepreneurs, I think it's very important for us to understand where we're standing for our financial self, for our future, for our family, for our legacy, for everything we're building, right? We work really, really hard for so many years, and we want to get to a place in which we have the ability to have a choice. I think that's key. That's where everybody's at. You want to be able to get to a place where you have a choice. And if you do some of these things that Drew was talking about, investing in yourself, here we go. You have an opportunity to have creating those choices, right? So yes, I appreciate you, Drew, for coming in and sharing your time for us today, my friend, and your financial advice. I hope this was valuable to you guys. As always, every week, try to continue to bring value to you guys, to the team, and just get this opportunity to see you guys' lovely smiling faces nonetheless. All right, so just keep quiet. This week, got EXP Explained on Thursday, and Friday is Friday Tech Talk with Eric Magnuson. So another great couple days here. So if you guys want to plug into that, all the stuff's on the Team Freedom Google page. If you have any questions, let me know. Other than that, go out and crush it and go get a book. That's my last 3 words. Go get a book. All right, I love you guys. Appreciate each and every one of you guys. And if you guys need anything, let me know. Have a great week. Go out and crush it.